Tamadoge raised $19 million, hit a fast 2022 high, and now trades like a barely liquid microcap. The tension is not whether the brand once had attention. It is whether a plate-worn pet token can rebuild trust after liquidity, migration, and roadmap problems. TAMA reached about 0.1927 in October 2022 after presale buyers entered between 1 cent and 3 cents. That peak gave early participants a real exit window. 3 years later, the token sits at fractions of a cent, and some trackers place the market cap in the tens of thousands of dollars. The gap matters because presale success once proved demand for the idea, while the current market proves demand for the token has nearly vanished. 10,866 should be read through the liquidity problem first. Liquidity means how many real buyers and sellers are available when a trade happens. TAMA now has such thin trading that one modest order can move the displayed price far more than a normal chart would suggest. That makes old-style support, resistance, and momentum signals less useful. The old Ethereum contract and the newer Polygon V2 contract also created confusion, because different venues can show different prices. At this depth, the number on a screen can look precise, while the market behind it is extremely fragile. Tamadoge was not just pitched as a dog meme. The original idea mixed virtual pets, NFTs, plate-worn rewards, and a store burn mechanic. Users would mint pets, train them, and compete for rewards from a Doge pool funded by store fees. A portion of in-store purchases was designed to burn TAMA, reducing supply over time. Games have shipped on mobile, which separates it from many projects that never delivered anything. The missing piece is augmented reality, the feature meant to let pets interact through a phone camera. Years of delay turned that headline feature into a trust issue. The late 2023 liquidity pool exploit changed the story again. The team moved the token to a new Polygon contract, which can be a rational security response, but migrations always split attention. Some holders migrate, some miss the process, and some sell instead of dealing with uncertainty. 10,866 is risky because the contract switch did not only change technology, it changed how easy it is for holders to know which market is the real market. A current contract warning also flags admin-level controls, which makes careful users ask who can change fees, selling rules, or token mechanics. The recovery case depends on specific events, not nostalgia. A real GameFi revival would have to bring attention back to older gaming tokens. The AR feature would need to launch in a way users can actually try. Liquidity would need to consolidate on one active Polygon market instead of remaining scattered. The maximum supply is 2 billion TAMA, and development and marketing unlocks were planned over a long schedule. Weak demand has to absorb any tokens entering circulation, so a tiny market cannot be judged only by old presale memories. Because supply overhang matters most when demand is weak, the unlock schedule is not just a background detail. It is part of the pressure that any new buyer interest would have to absorb. The useful next signal for 10,866 is not a dramatic forecast. It is whether TAMA gets one reliable trading venue, visible volume, and a shipped feature that brings users back. Without those three pieces, price ranges on a microcap screen can look bigger than the actual market behind them. With them, Tamadoge would at least have a concrete recovery path instead of relying on the memory of a 2022 presale. If traders cannot see one active market and one clear roadmap milestone, the token remains more liquidity risk than recovery story. A recovery claim also needs cleaner public signals than a scattered microcap chart. The most useful proof would be a normal trading pair, an active player base, and a roadmap item that is visible outside old community memory.